Today, we're going to peel back the layers on some of the headlines you're seeing everywhere. We're diving into a pretty provocative theory that connects some of the biggest, wildest market moves we've seen recently, from tech stocks going haywire to the price of gold dropping. So the big question is, are these just random events, or is it all part of some hidden script? Let's get into it.
When you look at the markets right now, it just seems like pure chaos, right? Tech is all over the place, gold is falling when it feels like it should be soaring, and don't even get me started on energy prices squeezing, well, pretty much everyone. This whole explainer is going to look at a theory that says these aren't separate things at all. Instead, they might just be connected chapters in a much larger, and maybe even deliberate story.
All right, so our first stop is what some people are calling the biggest market event in history. And it all centers on one massive initial public offering, an IPO.
Now, the logic here is actually pretty simple. If you're going to launch an offering of this unbelievable size, we're talking about the much-hyped SpaceX IPO, you need the rest of the market to be heading up. I mean, think about it. Who's going to be excited to throw money at a brand new stock when everything else is tanking? No one. The overall vibe has to be good.
So, how do you make sure the market is welcoming? Well, this theory suggests that the recent dip we saw in the tech sector wasn't really a collapse. It was a strategic, managed correction. The idea is that these huge investment funds were selling off their tech stocks, not because they suddenly lost faith, but to free up a ton of cash. They're getting ready to pounce on this new heavyweight stock that's about to completely reshape the major indexes.
And this is where it gets really interesting. The plan for this IPO is to give a whopping 30% of its shares to regular, small-time retail investors like you and me. Now, to give you some perspective, a normal IPO, it might set aside 5, maybe 10% for the public. So why the gigantic difference here?
Well, the official story, the one you'll hear in press releases, is that it's all about rewarding loyal fans for their support. But a more cynical take suggests something else entirely. It might be a calculated play to lock in what's called sticky capital. See, retail investors are often way less likely to panic and sell at the first sign of trouble. So this huge base of smaller investors could actually act as a massive stabilizer for the stock right out of the gate.
Okay, let's move on to the next piece of this puzzle and see how it all starts to connect. We're turning our attention to gold, an asset that has been acting very, very weird lately.
It's the classic question, isn't it? When there's inflation, when there's geopolitical chaos, gold is supposed to be the one safe place to park your money, and yet its price has been going down. So what gives? According to this theory, the reason has nothing to do with people losing faith in gold. It's actually a story about sheer desperation.
So let's just walk through how this works. Imagine you're a country like Turkey. Inflation is out of control, and your currency, the lira, is in an absolute freefall. To stop a total collapse, your central bank has to do something drastic. So they start selling off their physical gold reserves to get their hands on US dollars. Then they take those dollars and use them to buy up their own currency on the open market. It's this all-out effort to stop the bleeding and fight off hyperinflation.
And the scale of this is just mind-blowing. We're hearing reports that just one country's central bank, Turkey, has sold off 58 tons of physical gold since the middle of March. Now imagine this kind of forced selling happening with multiple countries in crisis. It creates this immense downward pressure on the entire gold market.
So here's the key takeaway. This isn't about gold failing as a safe haven. It's about certain countries facing a massive cash crisis, a liquidity crisis. And get this, many of these sales are apparently structured as swaps, which basically means these central banks fully intend to buy all that gold back once things calm down. This suggests that the price drop we're seeing might just be a temporary blip, a distortion, not a fundamental change.
And that brings us to our third and final provocation, the global energy crisis. This theory looks at high prices not just as a simple supply and demand issue, but as a powerful weapon in a global economic war.
First off, you always have to ask, who's benefiting from this? Well, sky-high energy prices are creating absolutely massive revenues for the world's biggest producers. Countries like the United States, Russia, and Iran are just swimming in cash from their energy exports. But where is all that money actually coming from? Who's footing the bill? So, who's paying the price? Well, if you follow the oil, you see that the overwhelming destination for exports from a huge producer like Saudi Arabia is Asia. That continent is where the economic pain is being felt the most.
And that's the strategic move, right there. The high cost of energy is basically a direct economic assault on the manufacturing hubs of the world, what you might call the world's factory. We're talking about the entire Asian ecosystem, and especially China. This isn't just about what you pay at the pump. It's about the cost of making and shipping literally everything.
This one statistic really shows you the damage. A full quarter of China's industrial sector is now losing money, and the rest are operating on paper-thin margins. The economic pressure is just immense, and according to this theory, that's not some accident. It's a strategic move in the ongoing economic battle between the US and China.
Okay, so let's pull all three of these threads together. Let's step back and look at the bigger picture this hidden script might actually be writing. So, when you connect the dots, this whole new narrative starts to take shape. You've got a gigantic IPO that needs a rising market, which might be driving a big reshuffle in the tech world. You've got the price of gold falling, not because it's a bad asset, but because entire nations are desperate for cash. And then you have a global energy crisis being used like a weapon in an economic war. It's definitely a compelling and, a pretty cynical way to look at the world. But it leaves us with one last, really big question to think about. If all these things that seem so disconnected are actually part of a script, what other hidden scripts are playing out right now, driving our markets in ways we can't even see?